What are some of the things you've been told about personal finance, credit, investing and money management? Sadly, the world is a callous place and offers very little sympathy. All we are surrounded by is bleak reality that millions are going through. There are a few key principles that can make or break you, and if you want to build a strong financial future, you need to know them by heart. You'll need to know a lot more than what your school could tell you about money. For example, how much interest you are paying in loans, or even how to figure out a credit score. Personal finance forms are a pretty interesting subject, and there are tons of success stories nowadays. By using these, you can cut down on the time, effort and headaches you would experience if you tried to do them on your own. So let's proceed to make you financially strong now. Build your credit. Your credit score can have a significant impact on your day-to-day life and is an important factor to consider before making a big purchase. If you ever want to get one of the top credit cards or borrow money at a low interest rate, then your credit score will play a key role. That's not all it does though. Your credit can also determine your car insurance rates, whether you pay a deposit when setting up utilities, and even whether you get hired for certain jobs. The good news is that despite the confusion about credit scores, it's not hard to build yours. You'll need a credit card that you use and pay off every month, and this helps you build a record of responsible borrowing. If you've had trouble qualifying for a credit card, secured credit cards are a good place to start. Just make sure you're paying your bills by the due date and not using too much of your available credit. Those are the building blocks of an excellent credit score. Emergency fund. You may never have heard of a school emergency fund. The latest figures indicate that up to 40% of Americans do not have the funds to cover $400 of emergencies. This is a disturbing statistic that just highlights how people neglect the value of an emergency fund. What if you lost your job today? Will you have enough cash to cover your expenses? The golden rule is to save up somewhere from 6 months of expenses, but we recommend that if you can do more, that's better. Save for retirement. It's imperative that you start saving for retirement early and take advantage of the tax breaks offered through 401ks and individual retirement accounts (IRAs). You'll give your money plenty of time to accumulate through compound interest, which is the smartest way to build wealth. What's important here is that you save something every month for retirement, whether it's $50, $100 or over $1,000. Later on you'll appreciate that you got into the habit of saving. So long as you invest the money responsibly, your contributions will grow many times over throughout your career. Budgeting basics. Budgeting is really important in life, but in school you won't learn much about it unfortunately. Not understanding the fundamentals of budgeting while in school will leave you disadvantaged right after graduation, particularly once you move out, not knowing how to handle bills and establish the difference between wants and needs, which will lead to one enduring difficulty one after another. But let's face it, as it's necessary to budget, no one really likes to track every single penny they use. What you can do instead is what we refer to as tactical budgeting. This includes making schedules and strategies for a long period. For example, for the next 6 months, you can identify what you need each month and create a budget with the needs, wants and associated cost. Compound interest. Time is the one thing that any young person has an advantage over anyone else. While they cannot automatically reach their financial goals, when it comes to saving they have an upper hand. All they need to do is tap into the compound interest forces. By putting aside small pieces of money in a high interest account, young people may accumulate great wealth that will compound over and over again. The first choice, $3,000, and the second, a penny that doubles in value every other day. If anyone gave you two choices, most people will prefer the first choice, but if you do the math, the second option will be worth 10 million after just 30 years. If that's not enough to encourage you to take advantage of this great opportunity to increase your wealth, then I don't know what it's going to be. Rules of insurance. If there is someone who is financially dependent on you, then you need to get life insurance. This may be your child, partner or parent. It's easier to get a long-term policy rather than life insurance, as you get coverage whenever the need arises. But if no one relies on you financially and a money saving policy, in addition to life insurance, get insurance for other aspects and properties that you own. This covers your vehicle, house, costly properties and health. Take your time before selecting a business to ensure what different rates and features are available. Maximise your income. Although it doesn't get talked about enough in the world of personal finance, increasing your income is the best way to save more money rather than pinching pennies. The amount you can save by reducing your spending is limited. Sure, you can make cuts here and there, but that doesn't work forever. Eventually you'll reach the point where there are no more cuts left to make. Instead of trying to budget your way to being rich, you're much better off looking for ways to make more money, negotiating a raise, finding a higher paying job, freelancing, or starting a business on the side are all ways you can bring in money. Planning for the long term. Financial planning means planning for the long term, be it for a month, year, or for your long term goals. Set aside certain financial goals for the long term and plan for the same. Maintain a budget and set aside a particular amount to achieve the financial goal. Planning for long term should begin now. You will have to work towards your goal and save and spend accordingly. Well, before we jump to the next topic, give this video a thumbs up or just subscribe to the channel for appreciation of our team. Done? Great. Spend less than you earn. The first principle is by far the most important. The only way you can be successful is by having more income than expenses every month. By spending less than you earn, you can put money away for the future instead of living paycheck to paycheck or sinking deeper into debt because you can't pay your bills. One popular piece of advice is that you should save at least 20% of your income in a high quality bank account. That's a smart goal for most people, but if you can save even more, you absolutely should. Create a monthly budget. Live within your means by creating a budget in the beginning of every month. Stick to this budget and avoid overspending on unnecessary items. From whatever amount you take home each month, save at least 1/3 of your monthly take-home salary to ensure that you do not overspend. Practice self-control and ponder if you really need to buy that expensive phone or the latest party dresses. Avoid impulse purchasing. Don't indulge in an impulse buy or try to curb extravagant habits as much as possible. Compare products from different shops and see what they have to offer. Also, don't think that buying in bulk is cheaper. You might be lured with various offers by different supermarkets that tend to motivate you towards bulk buying. Impulse purchases will leave you regretting in a couple of days when you see better offers and the same product available at a cheaper rate. Protect your health. Without insurance, the knee will cost thousands of dollars. If you find it difficult to meet your monthly health costs, then what will happen if you end up in the emergency room? You may end up having to borrow money to pay off your medical expenses. Burdening other people who have plans, doesn't it sound right? Often taking care of your health will save you a lot of cash. This includes eating the right foods, keeping a healthy weight, exercising regularly, not drinking alcohol, and heavy use of other additives. You don't want to be sorry, so guard your health today. So it's not necessary to weigh yourself down with tons of financial tips. The personal finance principles described above can help you no matter what you do or where you are in life. Follow these 12 important points religiously, and not only will you end up financially stable, but you'll also be able to grow your wealth for the future. If this information is really helpful for you, give this video a thumbs up, subscribe to the channel, and press the bell icon for more videos like this. Stay tuned and goodbye.